Hi friends, Yes Bank is a stock that many people, especially retail investors, are dreaming for it to go back to 400 level so that their 20 rupees or 22 rupees per share purchase can go up to 20 times. Meaning if somebody invests 50,000 rupees today, they want this 50,000 rupees to become 10 lakh rupees 20 times in the next 2 to 3 years. Now there is nothing wrong to think that a stock can go up to 400 levels, but is it realistic? In this video, in the next 10 to 12 minutes, I will present to you some meaningful data cutting through all the noise so that you can gain a data-backed perspective on Yes Bank. So what you see on my screen is recently in media, Yes Bank stock has been coming into limelights on the back of Q4 results, and what media has been suggesting is that Yes Bank Q4 earning net profit jumps 124%, and more importantly, asset quality improves. Due to their Q4 results, Yes Bank had zoomed close to 10% in very quick succession, and the question you will hear in the news is that should you now buy this stock? One thing before I go deep into the analysis, I want to say is that there is absolutely all the possibility of making money in this stock, but we need to be really realistic about this stock. Let me first demystify their profit and loss account. Have a look at my screen and you will see that in 2023, company earned a net profit of 717 crores. It has gone up to 1251 crores of net profit in FY24. That is a staggering growth of 74.4%. This is phenomenal. But more importantly, we need to understand what is driving this growth, because this seems very abnormal to me. And for that, if you look at the growth here, you will see that their non-interest income has jumped by 38% and their net interest income has only gone up by 2.2%. And net interest income is what is the bread and butter of a bank. What is net interest income? Net interest income is the total interest earned by the bank minus the total interest paid by the bank. And if this net interest income grows at a rapid rate, then you can be sure that the bank is doing really great. But here in case of Yes Bank, net interest income is only 2.2% growth, while the non-interest income has gone up by 38%. Let me now give you the breakdown of what is this non-interest income so that we understand whether this is a one-off growth or whether this is going to continue. So what you see on my screen is breakup of this non-interest income, and I want you to look at two parameters here. Number one is others, which is interest on income tax refund. So in 2023, their interest on income tax refund was only 4 crores, but in 2024, it has gone up to 118 crores. That's a growth of roughly 3000%. This is a one-off income that the bank has made this year. It is not going to continue in the upcoming years. Point number two here you will see is that third-party sales that has gone from 267 crores to 719 crores, which is a growth of 168%. What is this third-party sales? Third-party sales simply means when a bank sells its stressed loan book to a third party and say to them that, hey, here is 100 crores of stressed loan book, give us 10% out of it, give us only 10 crores of it, and you go and collect it from our borrowers. This sale in 2024 is what is driving this non-interest income of 168%. Rahul, you make things up very easily and you say this is a third party sale. Let me now show you the data as well. So if you come and have a look at this screen here, on May 5th, company sold their NPA portfolio to JC Flowers and they earned 61 crores in the month of May 2024. So this is a very regular practice that mainstream banks as well as NBFCs do when they sell their stressed loan book to somebody else to recover the money, because the banks or the NBFC have exhausted all their means to collect the money from the customers. They have called the customer multiple times, they have visited the customer multiple times, and the customer is still not returning the money. In that case, the third party sales come into picture. Very important concept that I learned in my 7 years of experience with a UK credit lending company. And if you like this analysis, a simple request you to hit the like button. Let me know in the comments a simple thank you. It will motivate me to do a lot of analysis for you at zero cost. Also, you can consider subscribing to my YouTube member community where I post such in-depth analysis about stocks and mutual funds, and you will get benefited a lot. With that, let's move to point number 2, which is the valuation of this bank. What you see on my screen is the PE ratio and PB ratio of private banks, and quickly you will notice that Yes Bank's PE right now at the time of recording this video is 53, while the industry PE is at 12. Banks such as HDFC, ICICI, Axis Bank, Kotak Mahindra, they are all trading at around 18, 13, 17 17 level while Yes Bank is at 53. It is massively overvalued. Immediate question you might ask me, Rahul, what is the big deal if the PE is 53? It is possible that Yes Bank is a turnaround story, or Yes Bank is growing faster than these private banks. So maybe that is what will justify the valuation. Well, let's not debate this based on the opinion. Let the data speak. Let me now present you data to prove that Yes Bank is not growing at many of the critical parameters as banks such as HDFC, ICICI, Axis Bank, Kotak Mahindra are growing at a rapid speed. The first critical parameter I am going to evaluate these banks is the NIMs, net interest margin percentage. Have a look at my screen and you will see Yes Bank's NIM right now in FY 2024 is at 2.4%, and in FY 23, if you can see the data here, it used to be 2.6%. So it has come down from 2.6% to 2.4%, which is a degradation in the fundamentals of this bank. Now if we compare this with, let's say, Axis Bank. Axis Bank's NIM for FY24 is standing at 4.07%, and it has gone up by 5 basis points. Immediate question might be that, Rahul, what is the big difference between 2.4% and 4.07%? Only 1.6%. But please understand, when it comes to NIMs, 10 basis point, 20 basis point is a huge difference when it comes to banks. It is one of the critical parameters to understand the profitability of the bank. Rahul, you have only picked up Axis Bank. Okay, let me go and talk about ICICI Bank. ICICI Bank's NIM is at 4.53%, and it has gone up from 4.48%. So when you see banks such as Axis Bank, ICICI Banks, their NIM is going up. My question to you is that why the NIMs has come down in case of Yes Bank? Because all these banks are operating in the very similar economic policies and regulations. Now I will only answer that question that because of priority sector lending shortfall that Yes Bank had in FY24, there was a drag as per their management's commentary. They had to put money into rural infrastructure development fund, which is one of the priority sector lending, and therefore their NIM margin has come down. So what, Rahul, in the next 2 to 3 years their NIM margin will improve? Of course, have a look at the management commentary, and what management is saying is that their NIM is going to improve by 80 to 100 basis point, but it's going to take next 3 years. This is what management is saying. Whether they will achieve it or not, I don't know. But in the next 3 years, the NIM might go up to 3.4% even if I take 100 basis point. So yes, their NIM will improve, but it will not go to the levels of ICICI Bank or Axis Bank in the next 2 to 3 years. That tells me that their profitability is going to remain on the lower side versus other private banks such as Axis Bank and ICICI Bank. Rahul, you are so biased. You have picked up NIMs, which is dragging in case of Yes Bank, and you are putting your point across. Let me pick up another parameter, which is cost to income ratio. Have a look at my screen and you will see cost to income ratio in case of Yes Bank is 75.8%. What it simply means is to earn 1 rupee of operating income, Yes Bank is spending 75 paise as an operating expense. Let's now compare this figure with likes of, for example, ICICI Bank. For ICICI Bank, this ratio is at 40%, meaning to earn 1 rupees of operating income, ICICI Bank is spending 40 paisa of operating expenses. And this is one of the reasons that ICICI Bank is much more profitable than Yes Bank. Rahul, what about the asset quality? Yes, when it comes to asset quality, I want to give Yes Bank full marks, really. Have a look at my screen and you will see their gross NPA is running at 1.7%. and their net NPA is running at 0.6%. Compare this with Axis Bank, for example. Axis Bank's GNPA is at 1.43%, still better than Yes Bank, and it has come down by 59 basis point. Massive reduction. Look at their net NPA here is running at 0.31% and declined by 8 basis point. But Yes Bank is not far away from Axis Bank when it comes to the asset quality. Let's now check another bank, which is ICICI Bank. Have a look at my screen and you will see ICICI Bank's gross NPA is running at 2.16%, higher than Yes Bank, higher than Axis Bank, and their net NPA is running at 0.42%. So I give full marks to Yes Bank to improve their asset quality, which was the biggest problem the bank faced in the last decade. So hopefully their gross NPAs and net NPAs give you some level of comfort as an investor that bank is improving every single year. Rahul, these parameters are fine. What about the loan book growth? Excellent question that you've asked me. And let me show you the data here. Have a look at my screen, and their loan book or the advances is running at 2,27,000 crores, and it has grown up by 12.1% year on year. Let's compare this with Axis Bank. Let's compare it with ICICI Bank. ICICI Bank's total advances is at 11,84,000 crores. So ICICI Bank is almost 5 times bigger than Yes Bank when it comes to the loan book, and it has grown up by 16.2%. So 16.2% versus 12.1%. So ICICI Bank is growing much faster than Yes Bank. And also please understand, ICICI Bank is 5 times bigger. So growing growing a loan book of 5 times bigger at a higher rate, at a better rate, is what really matters. And if Yes Bank was doing other way around, whether Yes Bank was growing at, let's say, 20%, 22%, then I would say yes, that high valuation is potentially justified because Yes Bank, being a smaller loan book, is growing faster. But that's not the case here if I compare that with ICICI Bank. Okay, what about Axis Bank? Have a look at my screen and you will see Axis Bank's loan book is 9,65,000 crores, which is almost 4 times bigger than Yes Bank, and it has grown by 14%. So in fact, better growth rate than Yes Bank. So coming back to the valuation, tell me, is the PE ratio of 53 justified for Yes Bank? Is the PB ratio of 1.74 justified for Yes Bank or not, given the comparison I have done with 2 private banks in the same space? If I were to calculate the share price of Yes Bank on the basis of 12 PE, if I multiply 12 PE by 0.45, which is their EPS, it comes out to be 5 rupees 41 paisa, which seems to be the fair value if I compare the industry PE. If I do the calculation on the basis of PB ratio, then the industry PB is running at 1.82. If I multiply 1.82 by the book value, which is 13.8, then it comes out to be roughly 25 rupees per share. But the bigger question is, would you value Yes Bank at industry level PB or not? In my view, the fundamentals of Yes Bank are not stacking up at the industry level, as we saw the comparison with the 2 banks. So I cannot really give the same PB multiple at which the industry is running. I would like to give it lower PB ratio. So if I consider 1.5 PB ratio and multiply 1.5 by 13.8, which is the book value of Yes Bank at the time of recording this video, it comes out to be 20 rupees per share. So in my view, the maximum money, if I was the investor, I would like to pay for Yes Bank share is 20 rupees. Even that is also slightly on the higher side only. So please, you make sure if you're investing in Yes Bank, you understand this maths, you understand these numbers, you understand these fundamentals, and based on these fundamentals and based on your own research, you take your investment bets into Yes Bank. I'm not saying that you can't make money on Yes Bank, because there is always a swing opportunity to buy it at low price, sell it at higher price. But from a valuation perspective, from a fundamentals perspective, from a long-term bet perspective, right now, I don't see Yes Bank being a good bank to invest. I would rather consider many other quality banks such as HDFC, ICICI, Axis, Kotak. Again, not a stock recommendation here. All I've done is I've given you data-backed perspective, and it is your decision because it is your money, your decision. I hope you enjoyed this video. If you did, leave a thank you comment on the channel. I would appreciate it. With that, I will see you in my next video. Until then, keep rocking.